General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
I should be able to go. So today is the middle of the week. Anchor point status. I'm thinking Tuesday anchor point is gonna hold. Tuesday roll to be. We came back and retested it and respected it with a nice reaction. Let that hold. So weekly buys bullish. Obviously that's the anchor. I'm expecting higher prices. Shifts in framework hit rate. Chopped up all week with earnings and watch testifying and CPI being small range. So it was choppy this week, very much somewhat doldrums. No case studies. We're at week 3. It's very interesting. This is the first half of the month. This is the first half of options expiry week. Very small range. Just lets you know this is summer doldrums. We're still inside with May. We haven't took May high or low. So it's still an inside month. Order flow is definitely trapped right here in this range. So there is no expansion or mitigation signals. We're not taking care of anything with price. We're just chilling. Decision quality is low probability. We haven't really been getting normal expansion. It's always interesting to see summer doldrums. Even with the headlines, the volume is not there. Narrative framework, low probability when price is not expanded. I trade expansions, experience success/failure. Showing up and studying what is going on right now. It's interesting to see Forex continue to show out in the summer with good price range because Nasdaq can't do anything. And no case studies. So it's Wednesday, 15. Today's expansion, daily extension gauge, confidence level medium. We've seen everything for price delivery signatures and time of week. Tuesday holding. Is expansion playing out? Not really. We're still inside the range. 10 minutes hit the day? No. So the deliveries. Nasdaq on the N15. Swept Monday's high. Sold off here. Various news, all that good stuff. Earnings. We had ASML earnings. No previous week's high. Prices getting pushed around with weekends. These are not the institutional big players. Most definitely not. Take a look at the H1. See if we came back and respected this order block. Still pretty much trapped order flow. We're trapped in between the new week opening gap in the order block. Previous week's EQ rejecting the price respected the OB. And take a look at the daily. Just behind the EQ, just chopping. Beautiful display of trapped order flow. It is. I don't think it get no better than that. Support resistance, retract. SPX 500. Much different. We didn't dig as deep as we did with NASDAQ. We already got the order block tested and respected on Tuesday, but we respect the EQ of the weekly range. And this order block is kind of holding us down. Just today was a miss. Here go the price action for the day. The H1. S&T, because we didn't get that dip that we got in the NASDAQ. Still strong though. And then here, all-time high is definitely a target. We just got weekends in this push up. Stock charts. SPY. SPY is not that strong. The little retracement got bought up. We didn't take any daily lows. Very strong was price action, but not expanding. This seems like the fake move. The only thing keeping it back could be the Iran drama coming back to mess with oil prices. Yeah, oil prices is coming, but keeping this thing down. It was messed up. I think oil was high this morning. See, QQQ daily. Tried to have a hold down day, but got bought up towards the end of the day. So people found some attractive prices down here. So, not that cheap. Nvidia is the only reason the market's not dropping, because we had a fair value down here. We've been riding up since this expansion. Each of these dips have been buying opportunities on Nvidia. Another green day for Nvidia is keeping things from falling out the sky. But I'll say here, dig deeper in the Q's chopping that EQ. Yeah, this is chopping EQ. Notes and thoughts. Did the framework play out? I wasn't expecting a small range day. What did I learn about pattern narrative for myself? Summer doldrums is more of a 20-point base hit environment. What will I watch for tomorrow? TSM earnings and Netflix. They report earnings after the market close. Alright, that's that on that. Y'all have a good day. Peace.